There's $100 trillion bomb ticking beneath the global economy. And when it goes off, it won't just crash markets. It will end the age of the US dollar. Most people don't even know this bomb exists. They've heard about inflation, interest rates, and government debt. But they have no idea what happens when that debt crosses a line that can never be crossed back. Because this isn't just a number anymore. It's a mathematical trap. And once you understand it, you'll see why the next collapse won't be like 2008. It'll be far worse. Let's start with the lie that built modern America. For decades, the world believed that the US government could always borrow more money. Politicians said the same thing again and again. The US can never default because it can print its own currency. That line became the foundation of global finance. It's why countries hold dollars. It's why oil is priced in dollars. It's why every central bank keeps stacks of US treasuries, debt backed by the full faith and credit of the United States. But faith is fragile, and credit has limits. As of today, the real US debt, including not just the official $35 trillion, but all the hidden promises like Social Security, Medicare, and unfunded pensions, exceeds $100 trillion. That's more money than all the physical cash, gold, and crypto in the entire world combined. And it's growing by $1 trillion every 100 days. Let that sink in. In the time it takes for a new iPhone to launch, the US government adds another $1 trillion of debt. Every second, another $40,000 is borrowed, mostly to pay for the interest on the debt that already exists. This is how empires die, not by invasion, but by compounding interest. The last time America had zero debt was 1835. Back then, the entire economy was the size of a small modern company. Today, debt is the entire system. Without borrowing, the US economy collapses. Without spending, it stops growing. So to survive, it must borrow more forever. Economists call this the debt trap. Every dollar of growth now requires more and more debt to create it. In the 1960s, $1 of debt produced 70 cents of economic growth. Today, it produces less than 20 cents. That means every year, the return on debt is collapsing, and the addiction is deepening. You can see it clearly in the numbers. In 2000, the US debt was about $5 trillion. By 2008, it hit $10 trillion. After the financial crisis, $20 trillion. By the pandemic, $30 trillion. And in 2025, it's racing toward $40 trillion. This isn't a random line on a chart. It's an exponential curve. And exponential curves always end the same way, with a vertical wall followed by collapse. The most dangerous part of this story isn't at the size of the debt. It acts the cost of maintaining it. For years, America got away with borrowing for free. Interest rates were near zero. The Federal Reserve could print trillions, buy government bonds, and nobody cared because inflation stayed low. That era is over. When the Fed hiked rates from near zero to over 5% between 2021 and 2023, something broke, quietly, invisibly, deep inside the financial system, because now the US government pays more in interest each year than it spends on national defense. Let that sink in. The US military, the largest in human history, costs less than the interest payments on the debt. In 2024, interest payments crossed $1 trillion. By 2025, they'll hit $1.6 trillion. And by 2030, if nothing changes, they'll exceed $3 trillion per year. That's not speculation, that's math. And math doesn't negotiate. When your interest payments exceed your income, you're bankrupt. When your government's interest payments exceed its ability to tax, your currency dies. For 80 years, the US dollar has been the foundation of global trade. After World War II, America had 2/3 of the world's gold and half of its industrial output. Every barrel of oil, every ton of copper, every cargo ship crossing the ocean was priced in dollars. That made the US debt the safest asset on earth. Every central bank wanted treasuries. Because the dollar wasn't just money, it was power. But power fades when trust fades. Countries like China, Russia, and even U.S. allies are quietly reducing their dollar exposure. They're buying gold, building currency swap networks, and trading directly in their own currencies. Saudi Arabia, the cornerstone of the petrodollar system, is now selling oil in yuan. India is settling energy trades in rupees. Even Europe is exploring alternatives to the dollar-dominated SWIFT system. The foundation of the dollar's dominance isn't military might, it's confidence. And when a nation owes $100 trillion, confidence evaporates. Because everyone starts asking the same question. If the U.S. can just print infinite dollars to pay its debts, what is a dollar actually worth? Most people think a default looks like missed payments or bankruptcy. But the U.S. doesn't need to officially default. It can default silently. Here's how. When a government owes more money than it can ever repay, it has two options: cut spending or devalue the currency. Cutting spending is political suicide, so the only real option is inflation. Inflation is the invisible default. It's when your money loses value so fast that the debt becomes cheaper in real terms. It's a tax on every dollar you hold. It's how governments steal wealth without sending a bill. The 2020-2023 inflation wave was just a preview. Prices rose. But what most people didn't see is that inflation reduced the real value of government debt by trillions. That's the plan, whether they admit it or not. Devalue the dollar, inflate away the debt, and pretend everything's fine. But that trick only works once, because inflation destroys trust. And trust is the only thing keeping fiat currency alive. The U.S. isn't the only one addicted to debt. Japan's debt-to-GDP ratio is over 250%. China's total debt, public and private, exceeds $60 trillion. Europe's debt mountain is climbing toward $50 trillion. In total, the world now owes over $350 trillion, 3 times the size of the entire global economy. And here's the part nobody talks about. All of it is built on top of the U.S. dollar system. That means when the dollar weakens, every debt tied to it shakes. Every loan, every bond, every currency peg. It's a chain reaction waiting to start. When the dollar loses confidence, global trade freezes. Capital flees emerging markets. Foreign investors dump treasuries. And the entire financial system, from Wall Street to Tokyo, starts to seize up. That's the real threat. Not default. Not inflation. But a total loss of faith in the world's reserve currency. The Fed has 2 jobs: keep inflation low and unemployment down, but now it's trapped. If it cuts interest rates to save the economy, inflation explodes. If it raises rates to fight inflation, the government can't afford its debt. Either way, the system breaks. In 2024, the U.S. Treasury spent more money servicing debt than it received from corporate taxes. By 2026, interest payments will exceed all tax revenue from individuals. That means every dollar you pay in taxes will go straight to bondholders. Not roads, not schools, not defense, just interest. It's the financial equivalent of a cancer, feeding on everything productive until nothing is left. And the Fed's only tool is the printer. It can't fix debt with debt, but that's exactly what it keeps doing. Here's what most people don't realize. The value of the dollar isn't controlled by the Fed. It's controlled by the bond market. Every time the U.S. issues new treasuries, it's asking investors to believe. Believe that America can pay them back someday. Believe that the dollar will still be worth something. Believe that inflation will stay under control. But what happens when investors stop believing? They start selling. And that's already happening. Foreign holdings of U.S. treasuries are declining for the first time in 20 years. Japan, China, and even U.S. allies are quietly dumping bonds. Who's buying them now? The Federal Reserve. That's not a free market. That's a feedback loop. The government issues debt. The Fed prints money to buy the debt. That printed money causes inflation. Inflation raises yields. Higher yields make debt more expensive, and the cycle tightens until it snaps. That's not finance. That's slow-motion self-destruction. We've seen this movie before. Every empire that relied on debt eventually faced the same fate. Rome debased its silver coins until they were mostly copper. France printed assignats until bread cost millions. Germany inflated the mark until it took a wheelbarrow to buy a loaf of bread. Each believed they could cheat math. None succeeded. The difference today is that America's system isn't local, it's global. The dollar isn't just the U.S. currency, it's the world's operating system. When it fails, everything fails. The IMF, World Bank, and central banks will try to step in. They'll propose digital currencies, central bank tokens, and new, stable systems. But these are just rebrands of the same problem. Infinite credit backed by nothing real. When confidence breaks, no digital coin can restore it. Imagine this moment. A treasury auction fails. No one shows up to buy U.S. debt. Interest rates spike overnight. The dollar plunges. Foreign central banks rush to sell their reserves. Stock markets crash. Banks scramble for liquidity. Within days, credit markets freeze. Trade stops. Fuel shipments halt. The global economy grinds to a standstill. This isn't fiction. It almost happened in March 2020 when the Treasury market briefly broke. The Fed had to print $4 trillion in weeks just to keep it alive. That was the warning shot. Next time, it won't be fixable. Because this time, the hole isn't in the system. The system is the hole. People think they're safe because their money is in banks or government bonds. But those are the same instruments built on the same collapsing foundation. Banks hold treasuries as risk-free assets. If treasuries crash, banks crash. If banks crash, deposits vanish. The FDIC insures $18 trillion in deposits, with just $125 billion in reserve. That's less than 1% coverage. So when confidence breaks, it'll happen faster than anyone can react. And by the time you realize the dollar's dying, it'll already be too late. Every monetary system in history has ended in reset. Gold standards, silver standards, paper currencies, all eventually collapsed under the weight of debt. When this one ends, it won't be with a bang. It'll be with a click. A digital currency issued by central banks, programmable, trackable, and controllable. They'll call it innovation. They'll promise it's safer, faster, more efficient. But it won't be money. It'll be control disguised as currency. Because when you control money, you control everything. What people buy, where they go, what they believe. And the excuse for introducing it will be the collapse of the old system, the very collapse they created through 100 trillion of debt. Every empire believes it's different. Every generation believes this time is unique. But debt doesn't care about belief. It only grows until it devours the world that created it. The U.S. debt bomb isn't theoretical. It's real, it's growing, and it's unstoppable under the current system. When the dollar falls, it won't just be America that suffers. It'll be every nation, every company, every individual tied to the dollar's fate. The question isn't if the debt bomb explodes, it's when. And when it does, it will mark the end of an era. The final chapter in the story of the dollar as the world's reserve currency. History will remember this moment not as a crash, but as a reckoning. Because you can ignore the numbers, you can manipulate the data, you can even print money, but you can't print trust. And once trust is gone, the system collapses. That's the real debt bomb. And it's already ticking.